Hello, everybody. Welcome to the Fundamental Analysis webinar. My name is Troy. I'll be presenting for AvaTrade today. Real quick, we'll go over our risk disclosure. Keep in mind that each and every trade that you take has risk. You have the possibility of losses. So you should manage your risk in some way that makes sense, whether you're using stop loss marks, or maybe hedge positions prepared in the opposite direction to cover risk, or you might even use our AvaProtect feature, which is unique to our web trader platform and our award-winning mobile app AvaTrade Go. AvaProtect allows you to protect against losses for defined time periods for a small premium cost. So that's something we'll take a quick look at that as well as we get going before we get on the charts to look at the movements. So you can ask questions about that if you're not sure about it. And so moving forward, keep in mind also that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, what we want to look at first is, in general, what is fundamental analysis? And I know we get a mix of experienced traders and also new traders in the webinars. And so we won't spend a lot of time on the basics of what is fundamental analysis, but we'll just run through it real quick. And then we'll get into the actual news and the charts here in just a moment. Fundamental analysis, what is it? Basically, it's the news. It's what's happening around the world that might play a role in driving certain instruments in the market, one direction or another. And usually it's a good idea to understand what is happening fundamentally around the world so that you have a better idea of which way the wind is blowing, so to speak, on the instrument that you're planning to trade. So whether we're looking at regular economic announcements or events, such as some of the ones we'll look at today, a interest rate decision out of the UK, other big economic numbers that have already come in today, any economic announcement schedule you can find in many places, including on our web trader platform, shows you exactly what announcements are coming and when, and also what instrument or currency is it expected to affect. And so those types of fundamental news events are easy to plan for in terms of timing and scope because they're scheduled for you. You know exactly what it'll be about. The other type of fundamental news that we need to deal with is the extraordinary kind, the kind where it's not scheduled. You don't know what headline might hit. Sometimes you have an inkling of what it might be about, that there's going to probably be a headline about something to do with the virus spreading in India, but you don't know what that headline will be or when it will be. You don't know if it'll be good news or bad news, or when that headline could come. And also, obviously, there are things that are completely extraordinary and unpredictable that could come at any time, that we just don't know what those headlines might be that will move one instrument or another in the market. Now, we can prepare for those types of fundamental news stories even without knowing what they'll be or when they'll be. And we'll talk about that as we go over the charts and how you cover those types of potential events with pending orders. It's a very simple strategy: buy stop and sell stop pending orders above and below important price levels that you know it's going to take big news to break those price levels. And if they break, then boy, big news must have hit. And you can get in on movements that you just put trip lines in the market, waiting for those big headlines to hit, whether it's something that will disrupt oil supply and make the price go flying up, whether it's something in the past when it was about Brexit and caused the strength of the pound to go flying one way or another. It can be anything along those types of lines. And you can prepare for those types of extraordinary economic events just by putting pending orders in strategic locations and waiting for the big breakthrough moves to potentially occur. All right, we'll look at examples of both here in just a moment, both ways of dealing with fundamental analysis. So if we want to then jump and look at some of the headlines and see, well, what's happening right now as we speak. So we see China and Australia are having a dispute. It's been kind of ongoing for some time now. And now China suspends economic dialogue with Australia as relations curdle. Okay, so if you understand the relationship economically between Australia and China, you understand that that's a big deal, and a big deal for the strength of the Australian dollar then. So, one of the biggest buyer of Australian exports, iron ore and coal, etc., has been China. And so usually as China goes, so goes the Australian dollar. When China has good economic numbers that come out on the economic calendar, usually you can bank on the fact that support levels will more likely hold and resistance levels break on the Australian dollar JPY. The Australian dollar likes when China's doing well, typically, traditionally. And so, with that understanding of a fundamental connection between the two economies, then it makes headlines like this make you think, well, maybe the Australian dollar might not be breaking resistance levels. Maybe I want to trade down from resistance levels right now rather than buying off of support levels. So this is the idea of understanding which way is the wind blowing right now. But it's kind of, it's a tug of war here, because a lot of the economies, as we'll see in a moment, are starting to do really well coming out of the pandemic. And the better the economy does, usually that's good. Economies around the world in general, including China, the better they do, usually that's good for the Australian dollar, with Australia being a big commodities export nation. And so you've got reasons for the Australian dollar to strengthen, but a big headline here to put a damper on that and maybe drive the Australian dollar down. So we'll take a look at maybe the AUD JPY, AUD USD, etc. European stocks near record high on strong AB InBev and bank earnings. Okay, so it's earnings season. Every few months, banks and other corporations report their numbers, their earnings numbers, their revenue numbers, etc. And important entities have been doing very well out of the European Union. So that's driving the stocks up. It's another sign that there are recoveries going on after the pandemic. So there's actually lower anxiety right now. It seems to be overall, the sentiment seems to be positive looking at these headlines, other than for the Australian dollar, right? This Australian-Chinese dispute that's going on. Now we take a look at the next headline. Dollar consolidates near 2-week high, Bank of England to meet. Okay, we talked about that. There's an interest rate decision today and some other announcements. We'll take a look on the economic schedule affecting the pound and also other currencies. And why did the U.S. dollar hit a 2-week high? Why did the U.S. dollar strengthen and maybe pull the euro down recently? The dollar index maybe strengthened a bit because Janet Yellen, and it wasn't really her place to be making this statement for the position she's in the U.S., but she stated that she thinks probably an increase in interest rates in the U.S., a moderate increase, could be in order soon, which is the opposite of what some other folks in the U.S. have been trying to say that are deciding monetary policy. So there's a little bit of a discrepancy there. But usually when Janet Yellen speaks, because she's held important positions in terms of financial decisions in the past in the U.S., traders listen, and what she said caused the U.S. dollar to at least temporarily strengthen yesterday against the euro specifically quite a bit. So now we're looking at, okay, the dollar maybe had an overreaction, the U.S. dollar, and strengthened because of a comment by somebody. But it's not like the U.S. is raising interest rates right now. So maybe that creates opportunistic entry points if the U.S. dollar hasn't bounced off those 2-week highs yet. And if you believe there's a potential for movement on the pound with whatever this interest rate decision will be, maybe you look for opportunistic entry points with the pound and also with the USD against different currency pairings. So we'll keep that in mind as well. We understand why the US dollar's near a 2-week high. Kind of a comment from Janet Yellen did it. And but remember, there's huge stimulus probably still coming in the US, which tends to weaken currency. If they print trillions more in US dollars, that tends to weaken the US dollar. So that could reverse the dollar off of these 2-week highs potentially. So it's something to keep in mind fundamentally. All right, so if we look at the economic calendar, we see good news out of the European Union for German factory orders, better than expected. Good news out of Great Britain, PMI numbers, better than expected. Good news down here out of Russia. Good news for retail sales out of the European Union. Again, way better than expected. And now we have more announcements coming in 48 minutes out of Great Britain, and large announcements still out of with the ECB president speaking later today, and also big announcements out of the U.S. As well. So a lot of fundamental news still to come in terms of the economic calendar for the European Union, Great Britain, and the U.S. to create more movement, and a lot of positive news so far to add to the positive sentiment on the day. And you can real quick look up here, see the US dollar is weakening, down 0.3% today, the dollar index. That's a sign that there's positive momentum. When fear is low, usually the US dollar tends to weaken and the stock market tends to go up. And oil goes up easier against the US dollar if the US dollar is weakening. Gold goes up easier if the US dollar is weakening as an inflationary safe haven against a weakening USD. And so these are things to keep in mind fundamentally today. Futures are green. The fear index, the VIX index, is down, and US dollar is weakening, which tends to happen when fear drops. Okay, the US dollar a lot of times is seen as a safe haven, sometimes as fear hits the market. Gold is more of a safe haven when the US dollar is viewed as maybe weakening. So it looks like the strengthening of the USD that occurred after Janet Yellen's comments yesterday has peaked. US dollar is starting to weaken again. We can see that positive sentiment on the markets, and with potential trillions in stimulus coming on the US front, perhaps the weakening of the US dollar could continue. All right, so some potential thorns that could come on all this positive momentum. COVID spreading in rural India. They already said yesterday there was a record number of cases. Now today there's another record number of cases. Record daily rises in infections and deaths. Not good news out of India. And as bad as it is for them, things could get worse if that spreads to other areas around the world as well. If this new strain is not contained with the current vaccines, if the current vaccines aren't effective against it. So far, they believe it is, or they are, that the current vaccines are pretty much effective against this new strain. But the fear is, with this much spreading in India, with that many millions and millions of people catching it, that'll speed up mutations, and that those mutations could lead to a strain that the vaccines are not effective against. So this is the fear that could rise. And in an instant, you could see the markets sell off a bit in response to breaking stories like this. If the news gets worse, what do you think happens to the markets if a headline comes that the most recent testing shows that the vaccines are not good against the most recent strain out of India? If a headline like that hit, what would happen to the markets? You'd probably see oil crash down. You'd probably see the European, US, and other stock markets sell off, etc. Right? So you have to prepare, maybe with pending orders even, or with stop losses on already open positions in the other direction, that a headline like this could hit and completely cause things to sell off. So while right now it's positive sentiment, we saw that. Right now it's positive sentiment, fears down, dollars weakening, markets are hitting highs, etc. Great. So you can trade with what's known right now. But prepare either with stop losses, with pending sell stops, buy stops, etc., for unknown news that could break, maybe related to something like this headline. If this bad situation gets worse, you could see fear hit the markets real quick. It'll only take one or two stories, and that could happen. So prepare for the unknown with pending orders, stop losses, use AvaProtect, etc. to cover risk and also to go after unknown opportunities with new trades potentially with pending orders. Yeah, we'll look at GBP USD, Euro USD, no problem. I'm happy to do that. Okay, so that's the fundamental news situation as we know it right now. A lot of positive news, economic numbers positive out of European Union, out of Great Britain. We've got some big news still coming today out of the U.S., European Union, and Great Britain, and some bank rate decisions and information coming up too out of the UK and FOMC folks talking out of the US later today. So a lot of reason for big movement today, lots of potential profits to go after. When you're on our main website, by the way, if you're wanting to use AvaTrade Go, our award-winning mobile app, then you go to trading platforms, you go to AvaTrade Go, and there it is. Talks about the features, everything that's on it. You go to your app store. There's a link here for the two main app stores. You can just search for it in your app store as well, AvaTrade Go, and you can get it on your mobile device. And it has AvaProtect, all those advanced features that aren't available directly on the MT4 and MT5 platforms. But this app and our web trader will trade on your MT4 and MT5 platforms, meaning it's the same account. It's just a different user interface to trade on those platforms. So if we log in here, we'll be in the web trader, which looks like this. So we log in from the main website and you end up here, okay? If you've been with AvaTrade for a long time, by the way, since before the web trader was available, you might notice that when you log in, you don't see this. You're in the client area directly. That would be because you were with AvaTrade before this platform was available. All you have to do is ask your account manager or our support team to add the web trader to your login from the main website, and then you'll see this platform. And you can switch between your accounts, switch to demo. You'd see all your live accounts listed here, MT4, MT5. You can trade on all of them right from here. Any trades you open here show in your other logins on the MT4, MT5, etc. Okay, so I wanted to show you, we opened one position in the last webinar. We said, listen, gold could go any way. We weren't sure which way it would go. And it was more, the idea of opening this was to show how AvaProtect works. Okay, so we opened the trade. And if I look at the information on it, the protection cost me $69 approximately. Well, the position's down 157 now. So I could say, you know what? I think gold's going to keep climbing. The dollar's weakening. I don't think this is going to get any better anytime soon. So I could close and close the position, take the payment of whatever my negative floating is, right now 157 plus. If I close it, the protection, you see it has the gold shield. That means AvaProtect is protecting me against this loss. I still have protection for another 3 hours and 41 minutes. Okay, 3 hours and 40 minutes now it says. So I could let it go, see what happens over the next 3 hours and 40 minutes. Or maybe I think it's reached a high point that now I think it'll drop. If that was the case, then it would make sense before it drops the right direction, because this was a sell position. I could close it, take this payment, then open a new trade. And I'm only down what I paid for the premium, $69. Now, if it even drops halfway back, I'm in overall profit, right? So this is the value of AvaProtect. If it goes the right way, great. I take my profits. If it goes the wrong way, I'm protected. I know exactly how much I was risking for the 2 days of protection. So if I close this, fine, I close the trade. This is the amount that, see, now it says profit. See, profit, negative, but that's going to be, shows negative profit, meaning a loss, but that's going to be added to my account from the protection when I close the trade. Okay. So now I go back to trading, and if I think now I'm in a better spot to open a new trade to sell or to buy on gold, then I can open again. I can add protection again and have limited potential loss based on the protection I add. So it's a very cool feature. If anyone has questions on how it works, please let me know. Fundamental news you can find on this platform, by the way. So if you have a live account with us and it's not just a demo, you'll have Trading Central, which is a premium feature, working for free on all live accounts. And if you go to, let's say, Market Buzz, we can find fundamental news on whatever's trending the most right now. So right at your fingertips, the most recent articles. JP Morgan, it's earnings season, so it makes sense. They have a large number of stories going on, 569 that our system found. So you pull that up and you go to the most recent articles about that particular company or instrument that you want to trade on. So you can pull up these articles, see the whole thing. It'll take you to the place where it's found, and you can read about how does this affect JP Morgan. And so in very short order, you can do your fundamental analysis on a specific instrument right from the web trader itself. Okay, and that's really good for focusing on specific instruments to find headlines about that exact company or stock or indice, etc. And so that's a resource that's there for you. The fundamental news we did here when we were looking at the articles was more general, worldly type fundamental news to get an idea of how the markets were blowing up or down from a sentiment standpoint, from a big picture standpoint. From a smaller, more defined standpoint, this is a really good feature to find information on a specific stock so quickly or a specific instrument so quickly. All right, now let's go ahead to the MT4 platform. And I apologize, I didn't have it on my right screen. There it is. And in the MT4 platform, let's take a look at some of the instruments that you all are asking about and that the fundamental news that we just looked at would dictate that we probably should look at. Some requests are in for GBP USD. Keep in mind there's some major news coming out, bank rate decision and folks talking about economic policy in Great Britain very soon. And I mean in like within the next hour or two. So let's take a look at then, we'll come back to gold. Let's look at GBP USD. Okay, we see the US dollar has given ground back to the pound. The pound has climbed quite a bit. If we go to 15-minute candles, we can see that there's some resistance up here on the GBP USD. It hit here and dropped. I don't think it's done testing that, but it hit here and dropped. Why did it drop so quickly when it hit this price level here? Because there's resistance right here from yesterday. Okay, resistance down, resistance down, resistance down. So as it got near this price level over here today, it immediately shot back down. That's predictable. Okay, that's simple technical analysis. You could have been selling from that resistance price and already scalped a quick profit. Now, overall, there's some hesitancy whether this will break that resistance level because no one knows for sure what the Bank of England is going to say today. What will their rate decision be today? Maybe they hold the rate the same, but say something like Janet Yellen did in the US that rates will have to go up sometime soon. What do you think happens to this resistance level if they even give any inclination that they might raise interest rates with the Bank of England? What do you think would happen to the GBP USD if they said that? Higher interest rates, if they allude to doing that anytime soon, even if they don't raise it today, tends to strengthen a currency. So depending on what they say in their statement, that might be more important than what they do with the current interest rate. Okay, so that's something to see. The rate decision might be hold steady at low interest rate, but then when they start talking, might be something different, right? And unless you're Nostradamus or somebody else who claims to be able to predict the future, we don't know for sure what they're going to say. You might be pretty confident, oh, they're not going to raise interest rates yet. That might be more predictable. But to know for sure what they will say about, the economy's been doing good. We just looked at good economic numbers out of Great Britain, out of the European Union as well, out of the US as well. So the question is, what might they say that could drive up the strength of the pound or drive down the strength of the pound? And so we know what Yellen said about US interest rate policy maybe moving forward. Not that she's the one who gets to make the decision, but her opinion was taken seriously. Perhaps the same sort of statement is said today. We don't know for sure. What kind of pending order could we put above this resistance level to buy if it breaks the resistance? Okay, we might assume that if this resistance level gets broken and the price goes up above this second line that I drew, that maybe they said something about raising interest rates sometime this year or something. So, you might put a pending order. Let me go to 30-minute, 1-hour candles. You might put a pending order that, if the price breaks, and you see there's a bigger resistance over here when we look at 1-hour candles. So we've got resistance here that we saw. There's a little higher resistance up here on the 1-hour candles. So maybe a pending buy stop. Let me move this up just a hair after looking at the 1-hour candles. Here, I'll delete this. We'll move this line up. Okay, if it breaks this price level, if it breaks this resistance level here, okay, if it breaks this price level, then there must have been good news for the strength of the pound, right? So yeah, Matthew or Matgu, I'm not sure if you misspelled your name, or if it's a name maybe that's new to me. Matgu, I'm with you. Exactly. It's a buy stop pending order. You could put a buy stop pending order that will trigger if it breaks above this price level here. So somewhere near this last red line I drew, if it hits that price, then probably they had some kind of aggressive policy statement about interest rates in the future. If the pound strengthens enough to break this long-standing resistance level here on the 1-hour candles. So you might say, well, why would I buy from a higher price? And the question is, or the answer is, I would buy from a higher price because maybe that confirms in my mind that the fundamental news is on my side. I know there's big announcements coming out of Great Britain and the Bank of England today. So if I put a buy stop pending order up here and it triggers, boy, the news must be good for the strength of the pound, right? And if it is not good news for the strength of the pound, then we probably see it push all the way back down. So you could actually do a combination of things. You could do a market sell, right? I could say, okay, let me sell now. I'm selling on the pound market wise. If it breaks the resistance up here, if it breaks the first resistance level or the second resistance level, let's say, then I give up on my sell because probably they said news that's working against my sell. Now this is taking a gamble, right? A chance. I'm selling just because of the resistance level. That's a pure technical move. I'm selling. I'm putting my stop loss above the first and the second resistance level, and just playing the numbers and saying, well, the resistance is held for some time. That's a nice resistance level. I'll sell. I'll put my stop loss above the resistance and take my chances. That's one way to trade, right? Not necessarily one way that I would say is better than another or worse than another, but it's a different style of trading. It's purely technical. And then I could put my take profit down here, right? That's a nice support level. If it does come shooting down, this little support level here where I drew this line previously might be a spot where it has trouble dropping further, at least temporarily anyways. We see the last time it hit this price, it bounced back up. So if you're selling, a logical spot maybe to take profit could be down around here, okay? So this is a purely technical move, and then you cross your fingers and hope that they come out and say, hey, we're going to keep rates low for a long time, and then you might see the pound come flying down and hit your take profit. Okay, so you might be willing to trade that way, knowing that the potential is greater than the risk, right? The potential is greater than the risk here. So potential for profit, if they talk dovish, is much greater than the risk. If they talk, more hawkish, then okay, it hits your stop loss. And if you have a buy stop pending or order up here, it triggers your buy, and you let the sell close with your stop loss. Okay, that's kind of a 1-2 type strategy when you know there's potential for a really big move, and you take a shot in both directions with limited risk on both. Okay, in this case, we did a market sell, and we could do a buy stop pending order. Pending order, buy stop, buys from a higher price. And so it would be up here around 3939, something like that. Okay, so if I do that, there's my pending order up here. Okay, you see there's the pending order, the green line. That's my pending order. If it breaks above that resistance, I buy. And you could put your stop loss on the pending order back below that broken resistance, which now should act as support if the news is really on your side. And so you'd put your stop loss maybe down here and you take profit somewhere up at the next resistance level up higher. I didn't enter the stop loss and take profit, but we easily could. Stop loss could be 1.39, maybe 30 down here. Can modify, modify. Stop loss, 1.39, let's say 29, 10 pips risk. Take profit could be up here before this higher resistance, 1.3974. Okay, so then now we've got our take profit at about triple the potential profit compared to risk if we get in on a buy stop. So depending on the news here in a little bit, we could have a nice payout potentially on the sell, on the market sell, or if the news goes the wrong way with the announcement, we take a small loss and get in on a bigger potential profit on with the buy stop going up. Okay. Good question. Nagarasa, you're asking if there's a shortcut to search for instruments in the MT4 and MT5, and unfortunately there is not. You can start to type like the beginning of what it starts with. If I type the letter A, it took me to the first instrument that starts with A. If I type the letter M, it takes me to the first instrument that starts with M. You see? And if I type real quick and I type like US, it takes me to the first instrument that starts with those first two letters. So that's a shortcut to search here. It's not the best search method, but you can start to type letters. And if you're good at typing 3 or 4 real quick, it'll take you to exactly what you're looking for. Just to show you, that's why we made our web trader, by the way. Look how easy it is to search on the web trader. Anything you want. You just start to type the name. And I type gold and I get gold. I type GO, right? I get gold, Google, Goldman Sachs, anything I type, right? And I can type the exact name and it'll come exactly to the instrument I want. So that's why we built the web trader and AvaTrade Go mobile app. It has those advanced features, better search tools, better risk management in the order window. It tells you your potential loss to your stop loss. It calculates everything for you before you even place a trade on the web trader and AvaTrade Go. We offer advanced features like Ava Protect and obviously a nice search feature as well, which you don't have on the older software MT4, MT5. So you still have MT4 and MT5 accounts, but you can trade on it using our web trader. You can trade on it using our AvaTrade Go app to make it more user friendly. Okay. Now the MT4 and MT5 are still nice to use directly as well. They're more technical, but they allow you maybe to do some things that you can't do on the web trader, like you can use an EA, an expert advisor, auto trading robot. There are things you can load custom indicators on the MT4 and MT5 that you can't load onto the web trader. So while the web trader and AvaTrade Go are great, and for most people they're perfect, for more advanced things, we still have the MT4 and MT5 that you can work on directly as well. Very good question, Nagarasa. Okay, so let's look at maybe gold. I think a lot of folks are interested in gold. We see what's happening with GBP USD. We have big announcements coming out of Great Britain. This could go swinging one way or another. I've set up with limited risk on a sell, prepared for a buy in case it breaks the resistance. I'll let those run. We'll see what happens. Maybe we'll take a look on Tuesday during the evening webinar how those two trades turned out. Obviously, no guarantees. Okay, and by the way, if I would have opened these trades, the market move on the web trader, I could have put Ava Protect. I could have put a 1 day or 6 hour or 4 hour AvaProtect for a very small cost and not had to put my stop loss. And then the potential is I only lose through the announcement. If I'm covered through the announcements, I only lose the cost of the premium during that time, maximum loss during the protection, and my potential profit could still be huge. So you start to think, if I'm using the web trader, I could have set it up with AvaProtect right before these big announcements, and that could work out even better. So you should start to think about how you can work some of these special tools that we offer, like AvaProtect, into these trading strategies. You really could make use of them quite easily. All right, so let's take a look at gold. And we say, okay, gold has capped itself for the time being right up here. Okay, resistance, down, resistance, down, resistance, pushing down. I think, just as I said with some of the other instruments, I don't think this is done testing this resistance. Okay, 1800 seems to be a magic number, right? This resistance up here, if I slide to the top of these wicks, come on, activate my line. There it is. Okay, the absolute top of this resistance is right near 1800. It seems to be a magic spot, 1800. So what happens if we get past that price level, 1800? Let me go to 1 day candles. Now we see, okay, this was resistance back days ago. These are 1 day candles. Resistance, down, resistance, down, resistance, down, resistance, down. That's 1, 2, 3, 4, 5 times it tried to break this resistance on the 1 day candles and failed. What do you think is going to happen if it does break that 1800 level? Look how much momentum it took to get below 1800, and look at the crash that occurred. Look how far in these 1 day candles gold crashed when it broke below 1800. Look at the crash. Now it's knocking on the door of 1800 again multiple times. What do you think? What kind of momentum might there be if it breaks back above 1800? Okay, if the fundamental news hits that the U.S. is passing trillions in stimulus, whatever it might be, that could cause the U.S. dollar to weaken and gold as an inflationary safe haven to strengthen, whatever the news might be, whether it's an article about stimulus in the U.S. or whatever it is, it could cause gold to break 1800. And if gold breaks 1800, what do you think might happen? What happened the last time gold broke above 1800? Could be a big rush up. I mean, look over here. It broke above 1800 back here, and look how high it went. The last time it really broke through 1800 in a strong way, gold climbed up here to 1958. Okay, so if inflationary fears hit, if that headline comes, that whatever it might be that causes gold to break 1800, you could see a huge climb after it breaks above 1800. So there's no guarantee, right? So we would put a stop loss maybe. We could do a buy stop pending order on gold because we know there's fundamental news out there about potential large trillions in stimulus coming in the US. We know it's there. We also see the US dollar's been weakening today. We already looked at that. There's positive momentum on the markets. US dollar is weakening. When you see the US dollar weaken, the first safe haven for a weakening USD that people think of is gold. Okay? Yeah, Matt Gu, we're talking about breakthrough candle. You say it could be a big candle. It's called a breakthrough candle. When a resistance level that's held day after day, week after week breaks, many times you get what's called a breakthrough candle, which is larger than the other candles near it. And so that could happen here. No guarantee, but it could. So that's what trading is about, potential. So the fundamental news is there. We see the US dollar weakening already today. If some headline hits, unexpected fundamental news about larger stimulus, or maybe someone corrects Janet Yellen and says, no, we're not raising interest rates anytime soon, you could see gold go rushing up. Okay, it easily could happen. So we then prepare a buy stop then, one of those trip lines in the market. We say if gold hits, let's say 18 above this little notch here, you see this here? That's a resistance level. Let's say if it hits 1807, that it clears this resistance. Maybe before it breaks this, you might be giving up more ground than you want on second thought to get above this resistance. So if it clears this resistance level, maybe we say 1805. Okay, 1805. It clears 1800 by 5 whole dollars. Then maybe you're convinced this resistance level is broken and it could surge up well above 1800. You put your stop loss back below that level, so maybe at 1790. So $15 risk, 1805 to your stop loss at 1790. Your potential profit could be all the way up near 1900. 1890, let's say. Okay, and you can play around with the take profit spot. I can slide my take profit to this resistance level here. Okay, you see there's resistance here on the 1-day candles. So maybe you take your profit as it approaches that resistance if this trade kicked in and went the right way. So just before this resistance level here on the 1-day candles, that's still about, 4 times potential profit, 5 times, 4 or 5 times potential profit compared to the risk. Okay, so looking to make a large amount with a small risk. And all the while waiting for confirmation of a broken resistance level before you get in. Waiting for that fundamental news to come, whatever it might be, to break that resistance level with gold, to weaken the USD further, to strengthen gold, etc. Okay, and the first hurdle it would have if this trade kicked in would be this resistance level here, and if it breaks that, you're up and running quite a ways before you find more resistance. So it could be a nice opportunity to prepare for. Now, the other side of that is you could, in the short term, sell on gold, right? Same thing we did with the pound. I could come over here and say, okay, from a technical analysis standpoint, I'll just sell on gold now. I'll put my stop loss above the near resistance right here. If it breaks the resistance, I'm out. No problem. That's a small risk. My potential profit before the first major support level down here, maybe double or a bit larger than what I'm risking. Okay, so the difference between a purely technical trade, I'm just looking at the resistance level and selling from it. Then you look at a fundamental move and you say, you know what, I don't prefer to sell. The fundamentals are against gold dropping right now. The US dollar is weakening. There could be stimulus coming out of the US. I think gold should probably rise then. So fundamentally, the buy stop move makes more sense up here. Technically, a sell trade makes sense from a purely technical standpoint in the short term. Okay, and there's nothing wrong with doing both. Maybe the technical trade comes through before the fundamental news hits that could cause gold to break and trigger your buy stop. So you're diversifying your strategies even within the same instrument, right? So there's no reason why the technical move can't win in the short term. And then maybe tomorrow the headline hits about US dollar and stimulus, and then gold goes flying up. So until the fundamental news breaks the technical pattern on the chart, usually the technical patterns hold. Gold should drop off the resistance if there's nothing new fundamentally occurring. If something new occurs, then you'd say, well, gold probably should break the resistance then. So you've got both things happening at the same time. And there's nothing wrong with trading both ways. One with the market based on what you know now, and one with a pending order based on what you know probably could occur in the near future. And both are with limited risk. If you win on one, you're in overall profit. No one expects to win every trade, right? In trading, a lot of times, especially if you're setting up with a larger potential profit compared to risk, 50% win percentage is great if your potential profit each time is larger than your risk. If your take profit's further away than your stop loss, right? It's not the only way to trade, by the way, but if you set up that way, then 50% win percentage is great. And when you start to factor in on timing of announcements like we did with the pound, fundamental news stories like we did for gold, etc., there's no reason why you shouldn't be able to win at least 50% of the time. You just have to practice with your timing, your technical analysis, and looking at which way's the wind blowing today fundamentally. And you should be able to work it out with a strategy like what we're showing that eventually you can perfect it and win more than you lose in the long term. And that's the whole idea. Okay, I think this is a good place to stop. If anyone has any questions, now's a good time to ask. Good question. Margaret, you're asking how far away should you put your stop loss? And the answer is it depends. Depends on several things. One is it depends on your balance size compared to the trade size, right? If your balance is like my demo account here with over 100,000 in it, your trade size could be quite a bit larger and still put your stop loss a good distance away. If you're doing a larger trade size with a small balance, well, then your stop loss obviously can't be as far away, or you'd blow the account. So it all depends also on how much are you willing to risk, right? Are you wanting to risk 1% per trade? Are you wanting to risk 10% per trade? So there are a lot of factors that go into answering that question. And probably it's best that you maybe have a talk with your account manager, or if you don't have one assigned to you, contact support and ask for one, so they can work out the numbers with you in terms of what your goals are and what your preferences are. How much do you want to risk per trade? Once you know that, then you can start to determine what trade size you should take based on the particular opportunity and how far away the stop loss needs to be. Okay, so there's no one correct answer on that. Good question. Okay, I don't see any other questions popping up. Someone else is asking a specific question about, if you had $400, what lot size would be suitable? Again, there are too many variables to answer that without more information. I would need to know what instrument, where are the price levels, where's the support and resistance, how far away do we need to be to get past that price level with your stop loss? Then we'd look and see, okay, based on that number of points away for the proper stop loss, now we can determine what the trade size should be to risk X% of your 400. Okay, so we first need to know the instrument and analyze the chart like we did, and then we need to know what percent of what you have in your account do you want to risk, and then we can determine trade size. You're talking about Bitcoin. In general, small balances trading on cryptocurrencies is tough because cryptocurrencies have a little bit lower leverage than the other instruments. So you need a larger balance to begin with for equal trade sizes compared to other instruments. And then also, cryptocurrencies are a bit more volatile. So if your stop loss is too close, you get knocked out of the trade a lot of times before it gets moving, even if it was eventually going to go the right way. So my advice is keep your trade sizes small enough that you can risk the amount you want to risk, right? And also stay with the trades through the price levels that you'd like to stay with the trades. And so again, there's no exact answer. What trade size should you take? But talk with your account manager, get a one-on-one session so that you can take a look at your exact balance, the exact chart of that instrument, what price level you prefer to get in, etc. And then you can work out a trade size that makes sense to you. We can't tell you what trade size you should or should not take, but we can work out, if you take this trade size, here's how much you would risk, and here's what your potential profit would be. If you try to take this trade size, maybe you can't because you don't have enough balance. We can work those numbers out with you. We can't tell you what you should or shouldn't do, but we can help you understand it. Okay? All right, everybody. If you ask a specific question like that earlier in the webinar, we could go through it as an example for everybody. So come back to the next webinar, ask that question early on, and we'll pull up Bitcoin USD. We'll work out a trade size, and I'll show you how to calculate the exposure and the potential profit and what balance you would need, etc. So that's a good idea. Ask a question like that next time in the beginning, and we'll take the time, 10, 15 minutes to walk through it. Okay? All right, everybody, thank you for joining. Looks like our sample trades here are off to a good start. If you're a scalper, you could close them now and take your profit. I think I'll just let them run through the announcements. We'll see what happens to carry on the strategy of having the market move and backed up with the pending buy, stop, etc. It'd be interesting to see how they turn out. It's possible you could win all of them, because before the announcements come, it could go one way, and after the announcements, it could go back the other way and trigger the pending orders. We'll see what happens as these move along. All right, everybody, thanks for joining. Till next time, good luck with your trading.